You've never seen it, have you?
Until yesterday, and
wow.
I thought that was funny, so we should watch it.
That was kind of crazy.
Okay. Well, let's begin the show. We've got Joe the
Barbarian.
What I'm doing here, Joe. Joe the Barbarian. Because you've kind of got two names, Joe the Investor and Joe Barbieri. So anyway, great to have you on the show today. And you're always talking about investment stuff and the financial situation and that sort of thing. So
yeah.
So we're talking about what's been going on in the markets. And I haven't really been following it because...
Are you invested heavily in the markets?
Yeah.
Yeah.
But I'm in it for the long run. The really
you
long run.
You kind of have to be these days, buddy.
It's like I buy and hold.
Yeah.
You know?
Blue chip stuff, right?
Always blue chip.
Yeah.
I've got very low risk tolerance.
Well, and it's such a volatile market, Joe. I mean, really, so our big brothers to the south, you know, I mean, we kind of are dictated by what's happening down there. We're not in as bad a shape, are we, in Canada, as what's happening with, I mean, it's a global stock market, but...
Well, economically, no.
Yeah.
The stuff that happened last week hit everybody.
Yeah.
What happened last week? Because I was busy.
You didn't read the news, I guess.
Well, I don't have time. But anyway, seriously, what happened last week? I'm just thinking more people have this attitude. You know, people are so busy on Facebook, they don't, you know, they're not going to get all upset if the stock market crashes. It's just another, you know, thing on their Facebook page.
Unless you're heavily invested. Then you are following, hopefully, day to day or, you know, trying to follow up on your assets.
It's probably good that you say that because that's kind of what I'm going to go into is, I call it the overreaction of September.
Okay.
Whereas a bunch of news was announced that there was a recession. Now the Federal Reserve had a meeting Monday and Tuesday, which is 19th and 20th. It was a 2-day meeting, so the market was quiet.
Yeah.
Wednesday, Ben Bernanke comes out and says, we're going to do this Operation Twist thing, which means we're going to sell long-term bonds and buy short-term bonds. And what this is supposed to do is twist the yield curve so that the mortgage rates go down in the longer term. When the market heard it, they said, so what? So nothing really happened.
Were they hoping it was going to have a positive impact on the markets?
But on interest rates more than anything for mortgage.
I think they were hoping that he would come out with QE3, printing more money. Instead, he came out with this, and the markets were sort of, what do we do with this? But right after, he came out and said, oh yeah, and the economy's not doing so well.
Not doing so well.
And right after he said that, the panic started at the end of Wednesday, and that went on Thursday and Friday.
That was last week, though.
Last week. But after he said it, the Eurozone announced their economy wasn't doing that well, and so did China. Now, if I back this all up to the last few months, they've been saying it's not doing so well since 2008. And they've said there's a recovery that's coming and we're helping it, but it hasn't come yet. So we're doing this QE1, QE2 to help it, but it's been very stale. And every meeting, the Fed governor would come out and say, yeah, the recovery's coming and we're going to do everything we can, but we're not really there yet. And the market didn't really react. But this time he said, no, it's not as bad, it's very bad, and everybody panicked. So what I'm getting at is that nothing changed, really, just the perception. And because of that, we had this correction of 5–10%. And what's really behind it is just what these news releases said.
Fear.
Fear.
Okay, so just for some perspective, where do the markets stand here at the end of September versus where they were at the beginning of September? Are they down overall?
They're down overall.
How
I don't
much
know.
About?
I don't have the number, but we'll say 5 to 10%.
Yeah, it was like 500
that.
points or so, you know, more, right?
But that all happened last week, pretty much.
Okay, well, I mean, it's this perception is so it's so much rides on the perception, because it was in the good old days when what's his name was the head of the Fed, you know, the guy
Greenspan.
Yeah. You know, he would speak every week, and the markets would react on what he just said about stuff, right? And now things seem to be a little bit more serious. And so of course, we had the whole situation where they downgraded the U.S. debt to what, AA plus
That
from
was
AAA,
August, yeah.
which, and it's just somebody's opinion about something, right? We all know it's worthless. That debt. But how much? $14 trillion? Yeah, they're going to pay that back. But, I hope nobody's listening.
Yeah, because now
that could have a big impact on the stock market.
You're fear-mongering.
Yeah.
Yeah.
But,
So,
okay.
so to back up the stuff I'm saying, I have this, which is on my website, the overreaction of September 2011, and it's got all the news sources that basically prove it or where the opinions came from.
So you think the market is overreacting? In other words, do you think that 10% loss over the month is not really justified based on the facts that the market overreacted?
Well, there's two sides to it. Yes, the economy's not doing so well. That's been going on for a while.
Yeah.
But the last week, whatever should have happened last week probably would have happened a long time ago. But they've been saying different things, and they changed what they were saying last week, and that caused. So is it justified? More or less it is, but the way it was done just looks worse than it is.
Well, I mean, on the other hand, there are, and you mentioned some of them, there's lots of different problems that investors can look at, and that's not the only problem. There's the European problem, the Greek problem, and just consumer debt of all kinds all over the world, right? I mean, that's just a time bomb that's ticking.
So, well, yeah.
So
exactly.
on a happy note, the rapture next week wipes that all out.
Well,
don't worry about it.
Well, the week after that, the day everything happens all at once.
Yeah.
So all the debt will get paid that day.
So we're good.
One,
that's what you're saying. It's golden.
It's a subset of everything.
It's a subset. We're screwed. That's basically what we're looking at right now. Well, this recovery thing, I mean, the recovery package that they had that Obama was trying to pass and keep going through, is that really coming, or is it just kind of, we got to keep saying this to keep the market alive? You know, is there really any recovery that's going to come that's going to turn it around and make interest rates a little better, mortgage rates, et cetera, more stable, that people can get back to work and buy a home?
Well, I think it will eventually.
What's eventually, though? I mean, are we looking at, like, again, long term? Are we looking 5 to 10 years, 10 to 15 years? I think it is long haul. I think you got to look 10 years into the future to see any real, substantial recovery for North America. And like you say, the global economic, you're shaking your head.
Well, what I'm saying is that because the debt levels are so high,
right?
This is that whole debate.
It's insurmountable. I agree with you. I mean, $14 trillion. How do you, on interest alone, how do you pay down $14 trillion?
And this is, I think, that's the real reason for that little tiff they had between Mark Carney, governor of the Bank of Canada, and that head of whatever that big investment company is, whatever his name is. Because really, they're just arguing about two sides of the same coin. It doesn't matter whether you need reserves for your banks or not. And it'll stifle the recovery in the short run because you don't have enough money in circulation. But the reason you don't, in the long run, there's not going to be enough money in circulation because it's all going to pay the debt.
Yeah.
All the interest. We're going to have to cut all our government services. It's going to destroy civilization unless we invent a new system. Seriously. It's already
we are heading there. I agree with you.
It's already when you start to cut things like transportation, when you start to cut education, healthcare,
policing,
all that stuff,
medicine,
you're cutting civilization because you owe interest, which is a completely bogus concept. But anyways, Joe, please continue.
So to go a little further now, so that news started this panic, and it happened during the 2 days, Thursday and Friday. Well, there's two things I want to bring up. The Swiss franc, or Switzerland, decided to peg their currency to the euro, which means whatever the euro is worth is what the franc is worth. Yeah. Now, before that, the franc was on its own, and they have a lot of gold that backs up their currency, so people were buying that as a safe haven. And if everything else went bad, they'd use that as a safety zone, and now they can't, because if they buy that, it's like buying the euro, and look what's happening with the euro.
Throwing your money away.
So that was dismantled last month, August. And then the other thing I found funny was the margin limits on the commodities were raised on Friday in the middle of a panic.
So that meant you needed more actual money to buy commodities. That's going to depress commodity prices, right?
And this is gold, silver, copper that were targeted. And usually you do this when the market's going up very quickly to slow it down.
Right.
Not when the market's crashing and it's looking to go down faster.
So what do you think was behind that decision?
Well, that's what I don't know, but I want to bring that up there because it doesn't look right.
Is it like a conspiracy to destroy the wealth of America?
Well, I'm not going to go that far, but
I, for
it's
one,
just
surrender to our alien overlords, and yes, it's...
We'll have to talk about that later.
yeah, I know.
So it just, I put all this together and say something is
What do you think is
not
going
right
on?
about
I mean,
all
tell
of it.
me what's inconsistent about this scenario. It's like, are you saying they're, instead of trying to help the situation, they're trying to deliberately hurt the situation?
I think what the real agenda going on is they want to bring the US dollar, they want to make it stronger. And by doing that, they're targeting all the alternatives. So the euro had bad news, we don't want the euro. The franc has been
Devalued because of the euro.
pegged to the euro, we're not going to buy that anymore.
Okay.
Gold and silver, we're not going to buy that anymore. So what's left is the US dollar, and it had the effect, the dollar strengthened.
And the Canadian
Quite a
dollar
bit.
has weakened
Yeah,
significantly,
we've dropped like
which
4
is
cents in the
which is
last.
good news
Yeah, for us.
for us.
Yeah,
But
But it's
buy American.
It's all been timed in a very short time,
yeah,
and some of these things don't. Well, the CME margins and the Swiss franc don't look. They don't look like they fit into this picture. And if
Okay.
they hadn't done that,
yeah.
the commodities would have rallied. The precious metals would have rallied quite a bit, and the franc would have gotten very strong. And the Swiss would say, well, we don't want a strong franc because that kills our export.
Right.
So that could be the reason why they did it,
Mm-hmm.
but they hadn't done it for 3 or 4 years while this pigs crisis was going on and while the Greek is going on. So why they do it now? So when I look at it from a distance, I say, okay, is there something more to this? And
What did you find?
until, well, I can't really prove anything,
Well,
but
that's okay.
I'm just saying what I think is going on. They're
Yeah.
trying to bring up the
To
US
bring it
dollar.
up, yeah.
And I think that's what's behind
Sure it is.
all of this.
Now, does that mean coffee's going to be cheaper? Because I've noticed it's been getting expensive.
All of the, the sin tax that we can put onto liquor and coffee and all that fun stuff. But
From the States?
yeah, wow.
Well, it's cheaper by 3
But
cents.
they're importing
this
just
year.
as we are. So
Well, yeah. Now, the thing about, okay, so the U.S. dollar is getting stronger. Now, because people have been talking about with the amount of debt that they owe, that fundamentally in the long run, the U.S. dollar is fundamentally weak in the long run, right? So how long can they keep this up? And what will the fallout from these kind of policies be?
I don't think they can keep it up very long because looking at the metals, I can see gold and silver now, all the demand is coming from Asia, and now the central banks are joining them, particularly the European banks. So, and they're doing that to shore up their currencies. So if all of them get into the act of buying gold, there's a lot of money behind them.
Yeah.
Right.
And so even though they'll do these margin limits and these panics, whenever there's a panic, they'll come in and level it off again, which I think they've done this week, and they've done it the last 2 months. So there'll be these shocks back and forth, but ultimately it's going to actually backfire. The dollar will actually cascade further, and the commodities will rally faster. I
In the
don't know.
long
ex-
run,
in-
somewhere down the road.
I'm
We don't
saying
know
6 to 12 months it'll
when.
happen.
6 to 12 months. So
oh, it's not too far away.
now gold's fallen a lot too. Is that because of all
Yeah.
these strengthening of the dollar moves?
Well, the two of them are, they're like a teeter-totter.
Right.
If the
Right.
dollar is up, the gold is
Yeah.
down, and vice versa.
Do you think gold? So,
So-
are you saying in the long run, commodities are bound to go up, and the dollar's bound to go down?
Yeah, I say that, and the fundamentals say that. So it's just when people don't believe this and say, well, I'm going to buy it anyway, and that's when the shift will come.
I just want to make a point. Like, one of the things, what makes an economy strong, it's one thing to have, to manage your money, quantities of money in circulation and all that kind of stuff, and interest rates and all that kind of stuff. But in the long run, an economy is strong when it's got fundamentally good education levels, when it's got good support for businesses to create and for research and development, and that kind of thing. And this is where China is excelling right now, and where the U.S. and Canada and Britain are falling down on the job. And it seems they talk about all this tweaking with interest rates and stuff like that, but nobody's really talking about really building up that fundamental knowledge base and that healthy business climate.
Yeah, I'd agree with that. And it takes decades to see that.
Yeah, and
but
it takes
once
decades to make changes in that too.
And I think we're in the middle of that now.
Yeah.
The Asians are taking over in those departments, and we're falling behind. And I think even South America can be put in there as up and coming.
Yeah.
And so and if you look at these investments, the BRIC, Brazil, Russia, India, China, is where all the money's going. And underneath that is what you're saying, the fundamentals are carrying them, and there's another 30 years left for them.
I would just I'd like to add Canada into that kind of up and coming category. But because we're a young culture, and we are, in terms of our arts, in terms of our creativity and business and that sort of thing, we're doing pretty well. But I'm just fearful that with a government like that we have right now, they're taking steps to take us closer to what the U.S. is doing, and not really supporting those things that fundamentally are going to be worthwhile in the long run.
I think we're right in the middle.
Yeah.
We can go either way.
Just like
if
always.
If we choose to go full strength into rebuilding and doing it ourselves, we'll do it.
Yeah.
If we're going to follow the developed world, then we're going to get behind. But we're I think we're right in the middle. There are parts of the country that say, yeah, we're doing it on our own, we're going to build, and other parts that say, no, we're going to keep it the way it is. And it's, you see it in the debates with people.
Some people talk about it, and about that the real geopolitical reality is that you have the Anglo-American Empire on the one hand.
Small that it is now.
Well, which is the U.S., Britain, Canada, Australia. That's the Anglo-American Empire. You got the Russians, who are always a wild card. You got the Chinese.
Another wild
and you
card.
got India that's, well, they're part of sort of half Anglo-American and half on their own. And then you got everybody else. But the real power plays are between the Anglo-American Empire, the Russians, the Chinese. Those are the three real big powers right now. Well, maybe Europe. And Europe's being, right now, they're kind of being, it sounds like it, they're kind of being kicked by the Anglo-American Empire, in a way, through these moves, that the euro's being destabilized.
That's the effect I'm seeing, which there's talk of breaking it up. There's talk of the Greece leaving it. I mean, they were talking about that all last week, that maybe Greece should default and get out. And actually people are not so shocked by that anymore.
Yeah.
A year ago that would have been unheard of, and now it's, oh yeah, maybe a default's a good idea.
Go back to the old ways.
So yeah, who knows?
Okay, Joe, any final thoughts you want to leave us with? Final word?
The key to the message is don't react too quickly. Make sure you know what's happening. Usually if you don't know, don't sell until you have your beliefs straight as to why.
Yeah.
I mean, you might sell in a panic if you feel it's the right thing, but usually it's better to wait it out.
Don't let fear dictate. Where can people find on your website, just so they can actually read through this?
So the website is www.joetheinvestor.ca.
Okay.
The tab is called Publish Articles.
Publish articles, okay.
And this will have a new beside it. There's 5 of them there, but it should be easy enough to see.
All right, good.
Fantastic. Joe, thanks.
Thanks,
Always
Joe.
great to have these conversations.
Thanks a lot.
Okay. So let's take a little break. I don't know what Aaron's got lined up here, but we're going to come back in a couple minutes with Kathy Zader. She came in all the way from Kitchener, Waterloo today, Stu. Can you believe that? And she's going back
lunch.
right after
My
this because
God.
she's got to go swimming later today. And
We'll get her to the pool on time.
and she's not letting us ply her with alcohol.
The liquid lunch. And
I
yet,
know.
I'm just
And-
drinking water.
Of course. And Danielle McCormick will also be here from the Arthritis Society. So let's take a break. We'll be right back.